Just setting it up right. Hi all, this is Ashish Kyal here. Welcome again to Elliott Wave News channel by wavestrategy.com and Ashish Kyal Trading Gurukul, a learning series that we are, this is Friday at 4. And this is purely from educational and learning perspective. Over here, I am nowhere recommending you a buy or a sell or a short. I am like a chart reader to you. So I'm not an astrologer, but I'm a chart reader. That is what I want to focus on right now. Past few days have been very tricky with the markets going all the way on the upside from that last Friday level. Last Friday was 11,420. If you remember it, I remember it distinctly. 11,422 was the last level that we saw on a Friday. From that 11,422, there is a rally of nearly around what 470 points as of today. Now, in that 470 points of rally, the euphoria has been skyrocket. The sentiment is polarized on the extremist on the buy side. Everyone and anyone is talking about that the markets are headed higher and it's a huge move on the upside, but possibly you were not able to get in on time, or maybe you were on the short side because the time cycles were in sell. Now, that's the problem. If you are probably trying to learn what I'm trying to suggest right now, you should be learning not from the fact that I'm talking about time cycles on the short side, but do you remember the levels that we discussed? So, to be honest, I went in the Friday's webinar and I checked it again. We talked about two levels. Can someone share it across with me over here? Which two levels did we talk about on the market? The two levels which I gave, one was of a panic button and was of a maniac button. Exactly, Chandrasekhar is sharing it across with me. 11,794. Rakesh, thank you very much. Bhavin, Sunil as well. And 10,800. So 11,794 and 10,800 were the two levels that we talked about on the markets last Friday. And the exact movement which has happened from there had been breaking the 11,794. Do you remember me telling you to go and short the market, or talking about that we are now probably in a very important zone which is going to tell you whether the markets are going to go up or going to go down depending on the break of the levels? Do you remember that? Yes, the important zone. Thank you very much. So the problem is people say I'm shouting on the top of my voice, the cycle is sell, you short the market at 11,300. I said it's 11,422 last Friday. How do you short at 11,300 at 422 anyways? And if you are shorting the market, do you are you a trader to put a stop loss? If you are not understanding the game of probability, how are you probably even trading? How are you even thinking of making a trade as your career? It's not possible, right? It's like I'm not a fortune teller who is going to tell you with 100% certainty. So I'm again going to repeat certain sanity checks before you go and proceed on these webinars here on YouTube. This is for educational purpose, and we are doing it so that people can learn from the knowledge which I have. I'm nowhere suggesting you to short or go long. I'm telling you what is the market suggesting. There is always a probabilistic scenario. In this probabilistic scenario, always understand you are probably, if biased on the short side, that's a very important sentiment indication. If you're biased on the short side, you will pick up things which is bearish out of this webinar also and short it. If your bias is on the long side, you will probably pick up the bullish things out of the webinar and go long. Exactly the same stuff happened when you are looking at a news. When you looked at news that the Trump is detected with COVID-19, last week we discussed that. If you are bullish, you will say that that's a sympathy gain and it will help him win election. If you are bearish, you will say if Trump can get COVID, as if he is not a human being, anyone else can get COVID. So that's bearish. So it's up to you what you want to pick up, how you infer it, and how this inference is translated into your trade decision. This is a classically known as a bias basis of the recency of the information. This is known as a recency bias that is also depending on what kind of information is fed into and how do you interpret that information. And that is exactly the reason why the markets move ahead of the news and the events, because people are anyways perceiving what's going to happen in the future. That's the perception, how it's going to go, and that results into the market movement. This is a classic 1 week indication which suggests that. Next, the markets are discounting what's going to happen in the future, and the only way you can try and understand that is by using a forecasting method which is known as uh, which is given by Elliott wave and time cycle. However, along with these forecasting methods, you need to apply very clearly and very importantly reactive methods. If you don't know, if you have not attended any of the Master of Technical Analysis program or any of the Master of Cycles program, I have told that very clearly. Forecasting is your expectation what the market should do. Will the market do what you always expect? No. And reaction is what you can look at the market and decide. Reactive methods gives you stop losses. It tells you where to place your stop loss. Forecasting method gives you targets. Why? Because when you're forecasting, the market is an assumption that the market will go there. And when you are not forecasting, when you're reactive, you are saying that this is the stop loss, if or this is the resistance and this is the support. If these levels get broken either up or on the downside, then the movement can happen in this direction. So that is a reactive method. I'm going to tell you very clearly. Neo wave and time cycle gives you a very strong forecasting ability. It gives you power, and you are thrilled because of that. But understand it. With this forecasting ability comes responsibility. What is the responsibility? You need to apply that along with the bar technique, along with the trend following method, maybe a moving average, maybe a super trend, maybe an Ichimoku cloud. Combine both of these worlds together and then derive your trade setup. This is what we do in Master of Cycles program. This is how we do it. For many of you who are from that Master of Cycles program and the mentorship batch, next Tuesday I'm at 7. I'm having a special Q&A session with revisions on the cycles, how to combine with these kind of market scenario, what should be the trade setup, where should be the entry, what should be the exit. Exactly. So I will, the invite will be sent by my team on Tuesday at 7. So you ensure you are there and check your email. If you don't get, you can get in touch with us and my team will set it up for you. This is exclusively for the mentees and the MOC attendees only. Okay, fantastic. So now let's move on and try to look at what's happening around in the markets. I'm again repeating, I'm nowhere certain. This is a world of uncertainty and a pure probabilistic scenario. Okay, in the world of probability, you are asking me to be certain and stop doing the blame game. It's your money. You think about it, where to invest, when to trade, what to trade, and what about your money management strategy? What about your risk management strategy? That's the first question that should come up in your mind. How do you manage that? Rather than going into a blame game, let's not get into that. Let me share across the chart. Okay, before I proceed, I'm speaking at the CMT Summit tomorrow and day after. I'm going to be there. I'm a volunteer leader there. If you want to attend that CMT Summit, you can register with the code AshishK 2020, and it's going to be fabulous. Huge lineup of speakers. Only attend if you understand probability. Otherwise, for certainty, please enjoy what you are anyways doing it. And I'm going to be speaking and it's going to be shared across. So it's Mr. Rakesh Junjunwala is going to be there. Steve Neeson is going to be there. So it's an honor for me to be speaking on the same platform with these amazing speakers. And I'm going to be speaking on Here I am back again. Yes, there was some problem. You have to live with that, right? I am at my resort in Cloud9 Lonavala, and that's the infrastructure you have to live with, right? At remote places. So that's the thing. Okay, let's just do the polling. I completely forgot that we have to do the polling. And we will do the polling right now. I'm just sharing this chart, but before that, let's just do the polling and see what is the Nifty trend in the coming week based on your understanding about the markets, not what I'm saying. Your understanding by next Friday, you think Nifty is going to close positive or it's going to close negative. That's going to be very interesting scenario that we are going to see before we proceed on where we are on the markets right now. Okay, that is interesting. I can see many of you over here. Okay, that's not what I was expecting. Though it is very tricky right now. This is very tricky. I was expecting that it's going to be a very classic biased poll, but I think the polling, I still have many of you to be vote across, so just keep voting right now. Are you able to see the polling booth right now? Are you able to see the polling booth? So do vote, do participate in this right now. And where do you think the markets are going to be by next Friday? It's going to be very interesting. We have a lot of people who are attending right as of now. I'm going to stop it in next 30 seconds. Okay, and is it going to be closing up or down by the next Friday is what the discussion is all about. Okay, I'm now stopping the poll right now, and you will be seeing very clearly over here. Okay, that's the poll, and I'm sharing the results. It's 53% of the people who have saying that the trend of the Nifty is going to be up, and 47% is negative. Now, that is something very interesting. I was expecting it's going to be polarized towards 65% on the upside and rest on the downside, but it is very interesting. I can clearly see that it's polarized not in any direction, and that's a very interesting poll. I think everyone on this webinar are intelligent enough to understand that, and that's why it is happening that we are able to forecast the markets very efficiently for past many months. Do you remember, if you have been following me for past around 6 months since the lockdown started, 6-7 months, we have been accurate on most of the occasions. Yes, and the Nifty has moved exactly the way we have told. So that is very interesting scenario, and it's great. Every one of you get a very classic a big thumbs up for these sentiment polling that we are doing. Okay, let's move on to the content now. The P ratio. Are you able to see the P ratio, everyone? Am I audible and am I clear? Okay, so the P ratio over here is suggesting that the overall market has reached back to these levels. These are the levels where the market is. Just 1 second. And okay, just a sec. Okay, these are the levels where the market is right now, and you can clearly see when you are looking at this P ratio. Can you read what is the P reading? 34.40. Okay, let me just clear off the annotation which has happened, because okay, fair enough. Now you can see the reading on the P ratio. Okay, so the reading on the P ratio is 34.40. Are you able to see that? Is that something very interesting? 34.40. Now this is a fundamental parameter. Someone might say this is a fundamental parameter. Someone might say it's a technical parameter, or how does it help? I don't care. You call what you want to say. The point is, what's most important for us to right now understand is it helping you in taking any kind of a decision? Okay, before I move on, I want to share across one very important part which I think every trader should know. Okay, stop the sharing. Very importantly, there are certain aspects of what we are discussing right now. Try to understand. That aspect is from a medium term perspective. So for example, price to earning ratio that we saw is at 34.40 levels. When we are looking at price to earning ratio, which is at 34.40 levels, I'm not saying that from tomorrow the correction should start. There is no such magic number that 34 hit ho gaya, so market niche aana chahiye, या 35 या 29. 2008 crash happened post 29. 2020 March crash happened post what, 31 levels, and now the markets are at 34 PE ratio. But that does not mean the correction will start immediately from tomorrow. It means what? It's a spring. You are using that spring, you are stretching it to the limit. But whenever you release it, the reconcile which is going to happen is going to be very sharp and fast. Okay, now that's from a medium term perspective. When I say medium term, that's again something very interesting, because for current generation, medium term means what? A month. Long term means 2 months, and short term means aaj. That's the current generation definition. For me, the medium term definition is over the period of months. Short term is over the period of weeks, and long term is over the period of years. That's how I look at it. So the definition itself is very relative. So what I'm saying is, the problem is, you are looking at a very big fundamental parameter over the period of 20 years, but trying to take a trading decision for intraday. Tell me one thing, does it make sense to do that? Are you insane to look at a 20-year PE ratio chart and short or go long on the market tomorrow? Please don't do that. That's a discrepancy. Next, on Monday, market opened with a gap up of around 100 points. After that gap up opening happened, around 11,500, 11,520, this gap gives you a very important information. Gaps, always remember, gives you a very important information that the trend is in that direction if the gap remains unfilled. And that's the reason I was on CNBC hours last entire week, and I said the Nifty now is buy on dips, given that we have started seeing a gapping action for intraday trades. For intraday trades, I'm again repeating. But what happened is, looking at this webinar, which suggested a bigger view over the period of weeks, maybe 2 weeks or something like that, you assumed that I should not go long, I should only short the market on intraday. Now again, what kind of a trader are you? Next, very important thing, if you want to be a good trader, you should be able to change your stand with a blink of an eye. I have told that earlier also in my previous webinars. With a fraction, with a blink of an eye, I will change my stand right from bearish to bullish to super bullish or super bearish. That is the luxury a trader has if you don't want to show it to the world. Okay. Now, if you want to show it to the world will criticize because they don't understand the intricacies of it. If you are a trader, you can change the stand with a fraction if that can give you money. That's the point. If you are wrong, simply change your stand, put a stop loss, get out. If you are right, ensure you make a killing. That's how it should be. You can be wrong multiple times. For 10 times, you can keep losing little. But once the trend comes, which is comparable to March, April, the recent ones, if you are long, these trends, once it comes on a Nifty, forget about stocks, you ensure you make a killing. But what happens is, when we make money, we make very less. When we lose money, we lose 300 points on Nifty. Check your stats, check your Excel, do your homework, do your exercise, take charge of your own trading decision. That's take responsibility of your own actions, then you will do something about it. That's a responsible behavior. Let's go back to the chart. So, and we will discuss about where is the PE ratio. So this is from the medium term perspective. Again, I am repeating, this is nowhere such anything at the short term. So 34.40. Now, can I very clearly say if this is what it looks like right now? And you clearly understand that there was a very classic move on the downside. Okay, and that clearly suggested, there is a very classic move on the upside. And that clearly suggested, okay, before I proceed, Devashish has classic thing to share. Previous Friday Nifty, FLD junction, Monday, the intersection cross traders who attended MOC. Okay, Devashish, thanks for pointing it out. On a Monday, post the MOC session, the intersection of FLD happened, and post that Nifty crashed by 350 points on one single day. And Devashish made a killing on that day. That clearly suggests it worked, right? Only if you are part of the session. Okay, let's get back to the PE. I'm deviating too much. I know that. Okay, so 34.40 is the extreme level. Can I clearly say that the maniac levels that we have seen on the past on Nifty levels were here? We were here. This is the top that Nifty formed in 2000, IT mania, 2008, which is again a mania on the upside, which we saw the financial crisis happening globally. And this is again in 2011, 2020, January, February, and this is where we are right now. That's a worrisome scenario. Okay, for sure. For fresh investments, if you are looking forward to, stock specific investment can be done in certain multi-bagger stocks, but for want to buy stocks, any and every stock, you are not going to make money. Okay, let's move on to the next chart. So it's a very clear indication we are at a very riskier zone. Trading is all about risk versus reward. The risk, is it warranting you to take a position either in trading or investment? That's how you have to look at it. So risk versus reward. Only reward without risk is a very incomplete way, or very incomplete statistical way of looking at the markets. Let's move on next. Okay, where is the slide gone? And I'm going to show you one very important aspect of, again, which is, let me just share across another screen. Are you able to see the screen now? Every one of you, are you able to see the screen? Brilliant. You can simply raise hand if you are able to see the screen, so that I know you are able to see that. And if you are on YouTube, you can simply say yes. This is a Nifty advanced decline ratio. So I'm not the person who is pessimist. I'm the person who is opportunist. I'll try to find out an opportunity, and I keep simply reading out what is already happening on the markets. If you're looking at this chart, very clearly, if you are looking at this chart as of now, you can clearly see that the overall market post this level of 10,790, this is Nifty blue line, and this is advanced decline line. The overall market post this stop has continued to deteriorate. You know what is the, if you are a good trader, you should keep a watch on something like this. Do you even know what was the breadth today, if I have to ask you? And you give an answer, I have no clue about the breadth. You are having a very incomplete way of looking at the markets. Okay, a breadth of today was more declining stocks than advancing. Breadth of yesterday more declining than advancing. Breadth of 2 days back more declining and then advancing. In fact, post September there have been more number of stocks declining than advancing. That's a very important information that you should understand. Not on Nifty itself. Nifty, its breadth itself was bearish. But on BSE India, if you go, you will see that there were hardly 1,000 or 1,100 stocks which were advancing against 1,500 stocks which were declining. Next, in past 1 week, if you went long on stock specific, how many of those stocks went the way you expected it to be? How many of those stocks went up along with the broader market, along with the Nifty, if you think this rally was a very genuine actual rally? A true bull market results into majority of stocks participating. But if you look at it, there were very fewer and fewer stocks that are participating now. Fewer and fewer stocks. This is a classic trap scenario. Before I do that, I should again repeat the disclaimer. I'm not asking you to short. I'm setting the context of the entire market. Understand that very clearly. This is the context of the market, and which I am setting. Based on this context, you are not trading. You are simply understanding the risk. The context gives you the risk perspective. And the trading happens once you see the pattern on the chart. Is there a pattern? If you look at the Nifty movement and the move on the upside, okay, let me hide myself. If you look at the Nifty movement, there was a move on the downside and the move on the upside. This Nifty movement, was there a pattern that you can see? One simple question I'm going to ask you. We discussed about Nifty at 11,420 last Friday, which was here. And where is it? It's here. We are talking, and so many of them are talking about this, which is missed. What about this opportunity which was carried and gained nearly around 400 points fall in a single day, 360 points fall? What about those things? So change your style, of thought process and perception. Over here, there was a pattern, a lower high, lower low, this was broken, there was a channel, there was a confirmation, a faster two-stage confirmation happened. However, post this up move towards 11,420, was there a two-stage confirmation if you have attended my Master of Waves program? Was there a cycle confirmation? Was there an FLD confirmation for intraday short? Was there a support level breaks? Did you see a faster retracement happening on the short side? What made you go short there? Just because the cycles were in sell, you short the market? You need to look at not cycles alone. You need to look at a huge number of things together before you take the trade. So these are the forecasting and reactive methods combined on on together. Are you able to see the advanced decline ratio right now on my screen? Are you okay? Perfect. Let's now move on further and let's move on to the chart of Nifty and try and see that what's happening and where are we headed. So these are all the contextual things that I'm talking about. Let me just make it full screen. Are you able to see the screen right now? Where are we? And okay. If you are able to see the screen, are you able to see that? No? Are you able to see my ME broker chart? I'm showing you something very interesting, which is known as a volume profile. Okay, a volume profile is something very interesting. It tells you what is a volume profile. Volume profile tells you at that specific price point how many. Okay, just give me a second. Okay, volume profile tells you at that specific price point the cumulative volumes. Okay, it talks about a specific price point. What is the total cumulative volume? How much of the volumes was there at that specific price point? I'm again repeating, volume profile. This is known as volume profile. It's also known as volume at price. Okay, if you look at this chart, the yellow lines that you see, this is known as a volume at price, or you can also call it as a volume profile. It tells you on this specific price point, all the price point at this specific level, what is the total amount of volume? Okay, why is this thing so important? Why is this thing so important? This is very, very crucial because over here you can clearly see, if I do and take this much of data, okay, I take this much of data, you are able to see something very important aspect on this specific. This low happened on the highest volume profile. Are you with me? Okay, this top here happened again on the second highest volume profile. Are you with me? This low here, this is always a zone, no specific price point, always a zone. Happened here. Okay, this is a spot chart and Nifty volume profile as per cash. This level is now over here. Are you able to see that? What we have to do is, this is the level which will give you a zone. Fair enough. Also understand the volume profile will change with the amount of data that you zoom in or zoom out. So that will change. You need to understand that very clearly. There is a very specific way in which the volume profiles can be used. So you have to use it in a very, very specific way and manner. There is a way in which the volume profile can be used and should be used. Okay, let me just save across this chart for you. I'll share it across on the Telegram and the Twitter. So do ensure you follow me there. Now, if you are looking at this specific chart, can I say the volume is increased? Sorry, not volume has not increased, but the volume is highest at this price point. Okay. Now, with this of information, I'm going to zoom in now. So the volume profile will change. Let me just zoom in. If I zoom in, you will still see the highest volume in this up move has happened near the zone of 11,200. Are you able to get it? I was looking at a volume profile right from 2020 top till the current level. So I got a huge levels volume at 11,900 to 12,000. With zoom in the current rise, the highest volume accumulation or distribution, whatever you want to call it, has happened where? Can you tell me the level? Every one of you, can you see that level? Where is the maximum volume which has occurred in this up move? Are you able to get that? 11,300. Brilliant. Thanks, Gitesh, Ravi, Sunil, Mahesh. Brilliant. Vimlesh Parag. Yes, 11,300. So can I say 11,300 is now an important support? Okay. In this entire, let me just clear off. This becomes an important support. Okay, Sachin is saying, thanks, something new I'm learning today. I ensure you get something out, always out of it, right? That's how the markets are. In this entire up move, when we were here at 11,420, I said not a single close has happened below the prior day's low. A first pause happens when there is a close below the prior day's low, but there is not a single close below the prior day's low even now. Okay, that's a very important information. That does not mean कि कल ये यहाँ close हुआ low के नीचे and you short again. No, that's not how it is. You should combine Ichimoku cloud. You should understand the wave theory. You should understand what is happening with cycles. The cycle top, the cycle low was still here. It happens only in the expansionary phase of the cycle, where we see a move upside, a downside, an upside, a downside, which happens, which breaks the high and then breaks the low as well. This happens in the expansionary phase of a cycle. Okay, does it mean that the cycle is wrong? No, the cycle is still valid. It is still applicable. 55 days is still is in the topping process because it is nearly completed, nearly around 32 33 days now. So 33 34 days now. It is still in the top side, but there is no price confirmation as of now. So that clearly suggests that when you are applying, so a lot of people who are aware about FLDs that we learned in the MOC, you can't really apply only FLDs. The first aspect that you have to understand is to apply the cycle, which is known as a phasing analysis. Post that cyclicality is done, then you apply an FLD, because then you have to take the trade in the direction of the cycle, which happens once the FLD is now going up, and then when you see a break on the downside, you get double confirmation. Why? Because there is a cycle which is in play, which is in the sell mode, and FLD confirms again. Are you with me? Are you getting the point what we are trying to discuss here? So cycle, is it invalid now? No. When will the cycle become invalid or shift the cycle? When we see instead of a low forming, there is a top form. This is known as an inversion again. If that also does not happen, nothing has changed. Cycle gives you a probabilistic contextual environment. What is the expectation that the price should do? And prices are supreme. It should confirm that it wants to go down. So that's a reactive method. The cycles are the predictive method. Making sense? Okay. So let's now get back to what do we expect. So we derive one levels on the downside, 11,300. What is the next level that we can look at the volume profile and derive on the upside? Let me again zoom out and check. Where was the highest volume? Because this is the uncharted move from the lows, we need to take into account the past data of March. Can I clearly see over here now? Okay, let me take a little more data and understand very clearly. Can I say that we are at the price point where the highest volumes have happened? So this is the zone of 11,900 and this is the zone of 12,100. I think this is 12,100. So can I say that the zone of around 12,100 to 11,900 is the zone where there can be resistance? So two levels we derive today. I assure that we will derive certain levels. Okay, this is the zone. Suppose if you want to go long now, what should be the trade setup? So far we are understanding the context of the market. Now there is no trade setup by looking at these things of cycles and FLD. So the setup will come when you look at Ichimoku cloud. Okay, I'm running out of time, so I'm not going to get into the Ichimoku cloud right now. But once you go and look at the Ichimoku cloud, you get an exact trade setup. What is the wave suggesting? Where are we right now in the form of waves? Let's do that. This was again an a B here, C here, D here, E here, F here, maybe a G here. That's G could have been here also. You are right if you want to mark it here or here. So this can be an X. Okay. Then what we saw is an A, B, a C, a D. expectation was an extracting triangle, but instead of that, it went into an expansionary phase. So what do you think it's forming now? Can you tell me? Can I say it's in wave E? Post E, can I say it can get into an contractionary phase of the market? That's how it can happen. No, no, let me not do that. Let me confuse you by saying it can go here or it can go here. Yeah, right now I have two arrows drawn on the chart. It's up to you which one you want to select. You want to select up, if you're bullish, select this one. If you're bearish, select this one. I'm nowhere suggesting what to do. I'm only saying that uh, we are into an expansionary phase and we should get into a contractionary phase. So expansion followed by contraction, a classic diametric pattern is what I'm looking at currently, and prices are currently in wave E. That's what I'm saying. Post E, F should come on the downside. Post E, where is E completing? You have to decide and you have to trade based on that. I can't give you all the information in this webinar. And yes, I publish in research reports. So you can refer those research reports where I publish about the markets. Okay, I can take a few questions. There are Q&A here. Let me just, yeah, before I move on, there is a mentorship program which is happening in November. Are you keen on joining that mentorship program? So what we are discussing here is just a brief about it. Okay, it's not about everything. So mentorship is about everything, right? From master of technical analysis to master of waves to 3 months of sessions, rigorous sessions and ongoing learning even post 3 months. Right now also on Telegram we are discussing a lot of things and a lot of discussions happening, how to take care of these market environment and all of those things. Okay, perfect. And you please participate in this poll. I'll answer a few questions in the meanwhile. Just 1 second. What is happening with Bank Nifty? Bank Nifty is also forming a wave E on the upside, and from that Bank Nifty wave E is going on. It's an uptrend, to be honest, right now, but it is stretched out for sure. Okay, it is too stretched out. At the bottom of this chart, I forgot to tell you one thing. Okay, first you can participate in this polling which is there. I'll give you a minute. I have to rush. And there's a lot of things to take care of for the summit. Shanmukha, you can simply drop a message. My team will get in touch with you. So you can drop a WhatsApp on 9920422202, and my team will get in touch with you with all the details and everything. So just participate in this poll. I'm going to explain you one thing which you can see as a volume oscillator on the bottom of the chart. Okay, and that volume oscillator is a very interesting aspect again. The number is 9920422202. Any information you can get it from there. A lot of things you will be get, and wavestrategy.com is the website. Upendra, yes, so please drop a WhatsApp or participate in this poll of mentorship. My team can explain you in detail about it. Okay, let me just end the poll now. Just 1 second. Perfect. I'm ending the poll, and since we are here, the volume oscillator tells you the rate of change of volumes on the chart. This oscillator is down. Don't go to this negative value, but just understand this oscillator is on the downside. It indicates that the rate of change of volumes is slower, which means that it is very important that the volumes are lower and lower with the euphoria, and the euphoria is created in these past 5 days of move, which is from nearly 420 levels to 900. So this 300 points of move created a huge euphoria on a lower volume at a volume at price level, which is very tricky with the cycles on the sell side, but prices are on a Viagra dose. If they are on a Viagra, it will go beyond the stretching capacity and it will keep riding. Let the Viagra dose effect come down, and once it comes down, we will see how it behaves, right? Okay, that's what I wanted to point out. Making sense to me? Okay, interesting aspect of that. Brilliant. So any other questions which we have? I've explained that. Sir, how can I access the research reports or journals? Krishna has a question on that. Research reports are available on wavestrategy.com. You can go there on the pricing and you'll get all of those information there. So you can simply do that. And Dow Jones' P ratio is crazy. Dow Jones P ratio is also crazy, and that's what uh, we are clearly saying that. Brilliant. And guys, I think I've taken too much of your time. I'm sure you are enjoying these Fridays at 4 webinars like I am, and you are acting sensible. You're not trying to waste your time or my time by saying that what I say is should happen. That is like predicting your fate and future. If I can predict your fate and future, I should be becoming an I don't know who. So I'm not here for predicting fate and future. We are only here to learn based on various things, and always use a stop loss when you're trading the markets. If you're not using a stop loss, you are simply not able to trade it correctly. Again, I repeat, Saturday, Sunday, I'm speaking at CMT Summit. Use the code AshishK 2020. On Tuesday, I'm keeping a session for the mentees of February and the batch of June, and for the MOC from 7 to 8:30. Ensure you register for that. You'll get an exclusive invite. We will discuss a much detailed exclusive content there based on exact trade setups of entry using Ichimoku Cloud with time cycles, with wave counts, because you now know master to the point. And we will discuss exact level to enter and exit in that. So do ensure you come there. And anyone who wants to be on Telegram, please do that. You can join my Telegram, aktradinggurukul.com. Yes, on the MOC Kiran, I'll share across the links of the Tuesday, so don't worry. And follow me on YouTube at the rate Kailashish. Twitter is again at the rate Kailashish. If you enjoy the session, do share it across. Not only the negativities of what you get out of free sessions, but what you learn new out of these sessions. Share it across on Twitter. It will be great, and pleasure speaking to each one of you. Enjoyed it thoroughly, and become a wonderful trader wherever the market goes. Use a stop loss, cut it short, ride the trend big, and enjoy the ride. Don't creep, don't blame, do all of those things, and you will enjoy it. And keep the anxiety levels low. That's what market is ensuring. You get anxious, do a mistake, and markets will eat you up. Don't do that. Thank you very much. Have a wonderful day, and stay tuned on Friday at 4. Stay safe.